You are two, not three. You are two, so not three. I don't know, but after the class, don't you receive the recordings?
We do.
And so yes, so we can
We do.
continue.
We do.
We can continue. We can so that
Okay.
they will get the recordings.
Okay.
So we are moving to a new topic today. Of course, divisional performance. Yeah, we do divisional performance, and then our next meeting will do budget. And divisional performance is simply you finding a way to reward the divisional managers. We have um, an organization, but one person cannot manage the whole organization. So therefore, they will find a way to share the responsibilities. Okay, they will decentralize the responsibilities. Like as in the school, headmaster alone cannot manage the whole school. Though he's the head, then you still have assistant headmaster, maybe academic, administration, and maybe sometimes domestic. Then beside that, you still have the HUD for science, HUD for social studies, English, HUDs for this, HUD for that. Now this HUDs, they are the those managing the divisions or the units. So those people are the divisional managers. Is that okay? So if you go to an organization, you have CEO, then you have other managers. You have um, HR manager, you have accounts, you have so, so um, we have procurement, we have marketing. Even if you enter marketing itself, you still have some divisions that are being headed by some people. So all those are what we call divisional managers. Of course, then if you understand that this topic is concerning about how we are going to reward them. So how do we reward these divisional managers? How do you think that these divisional managers they should still be paid the same way that ordinary workers are also paid?
No.
Yes. So if you are HOD, are you supposed to at the end of the day receive just the same as the one who is the class teacher, who is teaching in the class without any further responsibilities? It will not be fair. So we must find a way to give each of these or to give these divisional managers some bonuses. So that is all about this topic. Now, so when we talk about decentralization, you all know it. Um, we are talking about distributing powers to the lower level management for decision making. Okay, that is decentralization. Now, is it really important? What do we gain from decentralizing powers to the divisional managers? We have one better decision making. So the decisions, because these divisional managers or the people, they are actually at the operational level and they understand the situation far better than those at the top. So therefore, they can appreciate the issues and then take better decisions, quick decisions. So they don't have to wait till top level management meet before the decision is made. So they can easily take decision every day, day-to-day activities. You can take the decision. The decisions are quick. Specialization because they are always focusing on one aspect of the work. they become specialized in it and becomes better in decision making. Motivation, because um, they are part of the whole process. Because you've given powers to them, so they are part of the whole process. They become motivated in doing whatever they want to in helping the organization. So therefore, no, they won't sit somewhere and say that they were not part of what you have taken, because they are part of it, and therefore they are motivated. Time. So of course, when you decentralize these responsibilities, the top level management people, they now have a lot of time to think about strategic decisions. So a lot of time is there for them. They can think about the future of organization. What are these problems? Problems. One of them is that there could lead to SAP optimization. SAP optimization means you are always focusing on your aspects. You may be science students. So this you have those people in your school. You have those who are in charge of math and science. Math and science. They are always focusing, taking decision on math and science, making that sure that the students spend so much time on math and science, forgetting of English and other subjects, social studies. So that at the end of the day, the student goes to get a 1111 in math and science and go and get C5, C6 in English. And if you are looking for the best results for the school, one C5 in English cannot make the person who got 111 in math and science a best student, because other schools will also get it. So at the end of the day, it will lead to what we call self optimization. And of course, it can also lead to you not achieving what we call goal congruence. Goal congruence. So goal congruence is such a way that the whatever you are doing, you should have total achievement for the organization to be high, and not your achievement is high, but the total achievement of organization uh, is is low. So goal congruence simply, um, all of you achieved one goal, and that goal comes from this uh, um, specific or pieces of units, or when you add this piece, then you get the total one. Okay, so don't, if you are rewarding managers, based on their performance. Then some managers will just focus on what will make them perform and leave to what will not make them perform. And maybe what will not make them perform will help the organization to grow. And therefore, that would lead to what we call sub optimization. And of course, the organization will not be able to achieve the goal congruence to what. Then sometimes decentralizing can not be successful because some of the personnel may not have competent skills that is required to perform the work. Of course, some of them will not even accept that, will not take the responsibility because they feel they don't have adequate or competent skills to do the job you want to do. Another one is performance measurement. Sometimes one problem is that we are the right now we are going to use some of the measures, some measures of course that we use to assess or to evaluate managers and see whether they are performing it. Some of these measures also have their own limitations. Okay, and of course, so if you are using the same formula or formats to assess different managers at different divisions or departments or different branches, not all of them have the same systems, so not all of them have the same operations, because they differ. So if you are assessing them based on one particular format or formula, if, without considering those things, means you are not being fair to those managers. Duplications. Decentralization definitely will duplicate the work. The thing that if it was centralized, one person would have been able to do for all of them, because you have decentralized the issues or the authority. If there are five divisions, it means you need five people to do the thing that one person would have done at the top. So therefore, you pay one person, you are paying five people for the same work that, but at different places. Then that is what we call duplication of work. Then we move to responsibility centers. If you are given an authority, if it is given to you,
So,
um,
McLean,
sir,
good evening, sir.
good evening, boss.
This is Andrews.
Okay,
Okay, I want to find out. So, the decentralization we are looking at here, are we looking at it in terms of a single, let's say, a single organization practicing decentralization, or we can look at it from the angle a company with different branches, let's say all over the country? If that is the case, I think that say they will be assigned to different um, operations or different production. Maybe their branch in Kumasi is into a different production as compared to the one in Accra. The one in Takrady will be doing a different thing altogether. So when it happens like that, and it is not a single company that is dealing with decentralization, here would there be any duplication?
of course, there will be duplication. If you are doing different things but at different areas, the administrative work is it not going to be duplicated? Accounts work is it not going to be duplicated? Okay, marketing, especially if you are doing adverts, is it not going to be duplicated? There are a lot of things that will be duplicated, despite the fact that maybe the one in Kumasi is into production of soup, and the one in Takoradi is into production of uh, 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 um, maybe ships or the body of ship, and the one in Tamale is into production of uh, prajias or repairing of prajia and those things. But I know that they went, you get to the office, you need people to do the work, to do administrative work. When you get to accounts office, you still need three, if it is three branches, so you need four accountants. Meanwhile, if it was one person could have done it. Of course, even if it is in the same Accra, Accra is now like a country on its own. You have a branch in Kaswa, you have a branch in La Paz, you have a branch in Kaneshi, you have a branch in Tema. One person cannot do all these works. Is that okay? So you need more people, and that will definitely lead to duplication of it. It depends. We are doing theory. So when you get to the practical aspect, you look at what really exists there. So we try to cover as much as we can, but it may not cover all the issues, or it may not represent all the issues. Is that okay?
Yes, sir.
Yeah. Now, if you are given power, authority, okay, if you are given authority, are you not supposed to account for your authority? If you are given authority, if you are given power, are you not supposed to account for that power?
Yes, you have.
So if you are supposed to account for the power, then whatever happens there, you are the one responsible for that, true or false.
True.
Okay, if that is the case, then the unit you are responsible for, okay, becomes responsibility center. That unit becomes responsibility center. So we know what responsibility center is. So if you are given a particular unit, or you are supposed to manage a division or to manage some aspect of it, that aspect is now in your hands. And that center, of course, is the um, responsibility center. We have four of them. We have four responsibility centers. We have call center, a divisional manager whose responsibility is to incur costs and not to make revenue. When I finish explaining, you give me examples. So call center here, the divisional manager responsibility is to incur costs and not to necessarily generate revenue. It's not your concern about the revenue, but your concern is to incur cost. Okay. Maybe cost at the minimal um, rates or at the minimal cost. Revenue center is also the one who is responsible for generating what revenue and not necessarily incurring costs. So your work is to generate revenue and not necessarily incurring costs. Then we have what we call profit center. Before you get profit, you must know your cost, you must know your revenue. So cost, revenue minus cost will give you profit. So if you are the one in charge of generating profit, it means that you automatically generate cost. And you must automatically, you automatically incur cost and you automatically generate revenue. Of course, we don't generate costs, we incur costs, okay? So you are the one whose responsibility is incurring costs and at the same time generating revenue. So therefore you end up getting profit or loss. So for the profit center, your main responsibility is to ensure that there is profit flowing into the business. Then the final one is the investment center. Investment center, you hear investment manager. Someone say, well, I'm the investment manager of this branch. I'm the investment manager of this company. I'm the investment manager of that. Investments here, we are talking about um, um, the future gains that you are bringing into the business. So it could be financial investment or non-financial investment. Otherwise, it could be physical investment or financial investment. Financial investment, they are you engaging in bonds, subscribing to T-bills, giving out loans, taking loans and those things. So anything that has to do with money directly is what we call financial investment. Then the non-financial investment has to do with the physical aspect of it, like you investing in buildings, you investing in buying cars, you investing in buying land, you investing into properties. Okay, anything that comes under PPE, property, plant, and equipment, they are the non financial investment. So the manager whose responsibility is to engage in all these that I've mentioned is the one we call responsibility center. Okay. So that's responsibility center. The manager who is in charge of that is not only supposed to generate revenue. You know, when you do this investment, don't you generate revenue? You do so. When you do this investment, don't you incur costs? You do so. So that manager, his responsibility is not only generating revenue or incurring costs, but also ensuring that the investment in the company are well invested. Yep. So that is it. So you can just say this one, the manager is responsible for incurring costs, generating revenue, and then also investing in the performing investment for the organization or investment decisions. Okay, so if we say call center, which examples do you think will fall under call center? Which center or division do you think they incur costs or their responsibilities incurring costs?
Production department.
Production departments, for them, they just want to produce something. They don't care about how much the thing will be sold, even though they listen to what the marketing department would say or the accountant will say. Okay, so but then their target is to minimize the cost as much as possible. Which other division?
So, McLean, I think that the marketing department will also incur cost.
Which department?
Marketing.
Marketing, their main focus. Are you sure their main focus is cost?
No, their main focus is not cost.
Is it revenue or cost?
For them, their main focus is revenue. But in the course of generating revenue, they tend to incur cost, like advertising and co.
Okay. Yes.
Procurement.
Yes, procurement department is clear. Marketing department, what do they really do? Is it that they are marketing or they are engaging in do they sell like this or they are just marketing? What is this? What am I saying? If you are marketing something, what does it mean? Are you selling the thing?
Yes.
How is marketing manager different from sales manager?
What I'm thinking is that the marketing manager, the marketing manager, we may even have him moving to the field to look for customers with his team.
Okay.
And the sales officials also, they can be people who are giving the product, go and then distribute to customers. So when marketers bring the customers, then the sales department will issue the product to them. That is my view on it.
All right. So that's it. That's not our focus. Any other one? Okay, so let's go to revenue center. 2 examples for revenue center, 2 examples for profit center, 2 examples for investment center.
The sales department. The revenue center, sales department.
Okay, sales department, their focus is to generate revenue. Okay. Any other one?
The account department too.
What is their focus?
They try to minimize costs.
Okay. So you could see account department cannot really fall so much into each of these one, though, because they cut across everywhere. Yes. So they are focused on generating revenue. They are focused on incurring costs. Because the reason why I can't put anything in under them is that when accounts department, when the company make loss, can you go and tell the finance officer that is the one who brought loss to the company, I think you will not be so fair to the finance
Yeah.
officer. Yes. But meanwhile, the sales manager is there. He's selling and he's making losses. Okay. The marketing manager is there. He's not telling people about what you have. It's not marketing, or it's not advocating for what you have. People to come and buy. So, anyway, we move on. So you can look for the rest of the examples. Now, the question is, how do you, these managers that we have just talked about, how do you reward them for their efforts? You reward them using some measures or techniques. Okay, you don't just get up and say, "Oh, me, I like the market, the man at the manager at Takoradi. He's very good. He's kind. When I went there, he even bought me food. Even whenever I go there, he speaks to me nice. It's like, oh, yeah, he's very kind, and he gives me fish, and I come and chop. So let me give him more bonus than the one in Tamale. No, we will have to use some techniques to assess them based on these techniques, based on their performance. Then we would just reward them their bonuses and other rewards that will give them based on the performance. So what are some of these techniques? We have three main techniques we are going to use here. We have what we call return on investment, ROI. We have what we call residual income, RI, and then we have economic value added. So we are going to use ROI, RI, and EVA, economic value added. Return on investment, I'm sure you have come across it before, because if you remember accounting ratios, you should be able to remember return on investment. Residual income may be a new thing to you, though it is also something that is simple. And then economic value added can also be new. However, because of our time constraint, we will not be able to do all the three. We are going to do two. The two guys, they always follow each other. Okay, just like you and your friend. When you get to school, anywhere they attend, you'll see your friend. You if they see you, they'll see your friend. So that is how we are going to treat this one. So the ROI and RI, they always follow each other, and they are always disagreeing with each other. So you do the two, then you prepare to be examined on these two. But the EVA, when you come to do your masters, we'll do the EVA. Now, what is return on investment? Return on investment. Return on investment. Okay. What are you getting on your investment? That is all. What are you getting on your investment? If you invest 100 cedis, how much on top do you get? Well, someone said I invested 100 cedis and I got 40 cedis on top. So it means that return on investment, the ROI or the RI on the 100 cedis is 40 cedis. And if you are expressing that in terms of percentage, you say 40 cedis out of the 100 cedis you invested times 100, you will get 40%. So if you invest 100 cedis, you get 40 cedis. Your return on investment is 40%. It's the same as 0.1, is 0.4. So return on investment actually, so if it is 0.4, it means that every 1 cedi you have invested, you are getting 0.4, or you are getting 40 pesos. Is that not the case? If 100 cedis and you got 40 cedis, and it means that you express in terms of percentage, you are getting 40%. Every 100% is 1. Every 100% is 1. And 40% is 0.4. So it means that every 1 cedi you have invested, you are getting 40 pesos on top of that investment. So if you are going to invest 20,000, if you invest 20,000 and you get profit of, let's say, 2,500. So you take 2,500 divided by 20,000. So whatever you get, you can now express that as so 2,500 over 20,000, you get 0.125. 0.125. It means that every 1 cedi you are investing, you are getting 0.125 cedis. which is the same as 12 cedis 50 pesos. Eh? No. Right? Yes, 12 cedis 50 pesos. No. It's it's what? It's so I'll just convert 13 pesos. So every one cedi you invest, you get 13 pesos. So if your investment is 20,000 and you are getting profit of 2,500, it means you are getting every one cedi you invest in that amount, you are getting 13 pesos. Okay, so that is what we do. So therefore, you could see that I've just been giving you the formula. The formula for return on investment becomes that the returns you have gotten over the total investment. So if it is the profit, we call it divisional profit over total investment. For instance, the returns you got from the 20,000 was 2,500. So if you want the formula will be returns or the profit you have gotten over the total investment. But because the profit belongs to the division, we call it divisional profit over total what? Investment. Now there are so many ways use. If you don't see one, you can see another. So if you don't see divisional profit, you see operational profit. It's the same as divisional profit. Okay. So and if you don't see divisional profit, you see returns. So it's the same thing. Then the total investment. If you don't see total investment, you see total assets. If you don't see total assets, you see capital employed. If you don't see capital employed, you see average asset. If you don't see average asset, you see investments. So you see that there are many.
All
So
of them.
yeah, anyone that appears in the question, you use it. So I mention it again. So the denominator, you see total assets. If you don't see total assets, you see average assets. If you don't see average assets, you see capital employed. If you don't see capital employed, you see investments. So anyone that you see in a question, you use it. And the figure will be the same. So you won't see, go and see average assets and go and see what do you call it? Investments or go and so mix no. But if you even see average assets and total assets, the appropriate one to use is average assets. Average assets is opening assets plus closing assets divided by 2. So if the assets at the beginning of the year, 1st January, is let's say 15,000 assets, and then at the end of the year, 31st December, your assets has moved to 35,000. So you say 15,000 plus 35,000. That will give you 50,000. Divide the 50,000 by 2, you get 25,000. So your average assets you are supposed to use is 25,000 as your denominator. So that is it. Now look at this question. The following information belongs to this company, Happy Times. Okay, you are supposed to calculate their using ROI. ROI. So we have net assets here. So I say if you don't see total assets, you see net assets. Okay, so net assets was not there, so you add it to it. So your total assets, average assets, net assets, capital employed, investments. Then the divisional profit is also here. So if I ask you, what is the ROI for Central? What is the ROI for Central? There are 3 divisions, North, Central, and South. So you want to see which one of them is having the highest ROI. What is the ROI for Central? How will you do the calculations? Yes.
Say,
Yes, Andres.
So the ROI, the return on investment for central region is 2 cedis.
Show us the calculations.
Okay, so say you pick is equal to sales on total assets. So the sale for
Is that the formula I gave you right now? Did I say profit or sales?
it says sales. Oh,
Hey, I don't remember mentioning sales.
okay.
Mm-hmm.
The answer would be 24.
How did they get that? What's the formula?
So I use the operating profit over total asset times 100.
Okay. So what's the profit for Central?
So the profit for Central is 1,920.
And what is the assets for Central?
The asset for Central is 8,000.
Okay. So when you divide 1,920 by 8,000, what do you get? Multiply by 100, what do you get?
You get 24%.
That's it. So if you are expressing in terms of cities, what will you say? Everyone
get-
see. Everyone see that Central region gets invest. How much do they get?
0.24.
Speak like an accountant to someone who does not understand anything at the board meeting. Speak ordinary language. Because this management accounting, right?
Yes, sir.
If you go and tell someone 0.24, what is this?
In this is 0.2.
24. It's 24 pesos. 24 pesos.
Yes, that's what I want. So every 1 cedi that you invest, how much are you getting back?
24 pesos.
Yes, 24 pesos. That's how you speak. When you speak like this to your mother, she understands, right?
Yes, sir.
Okay, so do for the rest, do for North and South and compare which of them is having the highest. And what would be your advice to those who are not performing well? Or just general, what would be your advice?
Yes, sir.
Yes, madam, go ahead.
Sir, for the North division, the North is 18 pesos.
Is how much?
18 pesos.
Okay, 18%, right? Then you can make it 18 pesos. That's fine.
Okay. Okay.
The next one.
And South is 22%, which is 22 pesos.
Okay, so among the three, who is performing better?
The Central people.
So what would be your advice to those who are not performing? Or what would be your advice to all of them? Anyone, not only Gifty. Joseph, Mr. Joseph, what would be your advice to those who are not performing? Which one is performing least among the three?
No.
North. Okay. So do you have any advice for North manager? Speak your mind. Oh. So now we move to income. Residual income. Residual income. So somebody will say leftover. When you eat food and some is left, that is what you call residual. Right? Left. Something is left. It means you have taken something from something and the remaining one is what we call residual. Right? Now, this residual income is another technique that we use to evaluate the divisional manager's performance. This one, you don't get a figure as a percentage, but you get a figure as an absolute figure. Get it as an absolute figure. So here you look at the excess of investment over the targeted required rate of or target rates or required rate of returns. Now, let me give this example so that you get it clear. Still, these three divisions, one in Takoradi, one in 4 divisions, divisional managers. One is in Takoradi, one is in Accra, one is in Tamale, and one is in Kumasi. Now, I think Andrews raised an issue of fairness, whether it is going to be fair, okay, to assess the divisional managers, looking at their locations and looking at the works they do, which are different. Yes. So the problem of return on investment is that it does not care. It doesn't matter what you have, what you don't have. The divisional manager, residual income is trying to solve that problem. Because, for instance, somebody in Accra may have a lot of investments. What do we mean by investment? Somebody in Accra may have a lot of assets. Okay, the person has building, cars, the person this. Meanwhile, it's for the whole company. But those assets in Accra cannot be found as it is in Accra. Do you think it's really fair? Because the one in Accra is using the assets, okay, to do a lot of investments, to do more for its division. And the one in Tamale is not really have. Maybe the assets in total in Accra are 25 assets. And Tamale is having 7 assets. So do you think it is fair to actually use return on investment on all the 3? So it will not be fair. Okay. Sorry, I'm back. It's not going to be fair to actually um assess them equally. So this one is coming to say that okay, fine. You the assets that you are using that really is not adding anything. You are not the one. You are not the one generating profits, but the assets generating profits for the company, or it's not your own efforts that the company that you are getting those revenue. If that is the case, then let's take away those revenue that uh, is actually coming from the assets that you are privileged to have. Please, you get the background well. Simply, some assets are there, okay, and those assets are really helping you to generate more revenue. Or you have more money. The one in Accra, there is a lot of cash, so they don't want to keep cash. They are going to do T-bills. They are going to buy bonds. When the money comes, it goes to the accountant in Accra, and the divisional manager in Accra is using it as if it's coming from his own effort. Meanwhile, it's all our cash. The cash we get from Kumasi, Tamale, and Takrady. When it gets to headquarters, we will go and do the investment or treasury bills. And when the returns come, we add it to ours as if it is ours. Is it fair? Meanwhile, the one in Tamale is always going from village to village to go and do sales, to go and go to market and do sales, and then they will also bring their profits. But you, the one in Accra, you are sitting there, and then all the assets are doing the work for you. So is it fair for you to be doing that to us, to measure us or to assess us equally? The answer is
Yes,
no.
no, sir.
Yes, so therefore, let's try. We can't take it all. We will try to take out those assets from the profit you have made. So we are saying, okay, how much profit did Tamale one make? Is this amount? How much profit did Kumasi people one make? Is this amount? Accra, this amount, Takra did this amount. And then we'll now say, okay, there is some investment, and this investment, at least there should be some minimum returns from that investment. If this investment that we have, okay, there should be some minimum returns. So let's say the investment, the total assets in Accra is 500,000, and then the total assets in Tamale is 70,000. And then the total assets in Takoradi is 100,000. And then the total assets in Masi is 200,000. But the cry alone is 500,000. So we are saying that this asset that you have, and you all have your profit for each of these divisions. Let's assume that these assets you have grown or have given us some returns, minimum returns of, let's say, 15%. So Accra will give us 15%. Takra, they will give us 15% on the assets. And then Tamale will also give us 15%. So we are now coming to take the 15%, multiply by the total assets. So if Accra own is 500,000, when you multiply 15% by 500,000, what are you going to get? So you get 75,000. But when you multiply 15% by 70,000 in Tamale, you get 10,500. So Accra Ono, he must use his 500 assets to get 75,000 profits. And then Tamale Ono must also use 70,000 to get 10,500 profits. So if Accra present their profits, okay, if Accra present their profit as any amount, you must subtract 70,000. You must subtract 75,000. So if Accra present their profit, okay, you must take out their 75,000. That's 75,000. If a family present their profit, you must take out 10,500 because those amounts don't belong to them. It is not their effort that they made to get that profit. So that is what we call residual income. So simply look at the formula. So this is the profit that each of them will present. So divisional income or divisional profit. This is the profit they are presenting. And then they have some assets. That assets is running for them. So this is the assets. Then this assets, we are saying that there should be a minimum returns that this assets will give us, just like the 15% we have talked about. So we are saying that, okay, this 15% is what we call target rate of return. So multiply the 15% by the total assets you have. Whatever you have, you have gotten from it is not for you. So it cannot be part of this divisional income or profit. So we must subtract that amount because that amount was not your own effort. It was because you have assets. That's why the assets are generating income for you. So take out that one. What is left, okay, after taking out that one is what you call residual income. Residual income. You can now compare this residual income. Look at it, absolute figure. How much is the residual income for the terminal manager? How much is for Accra? How much is for Takoradi and Kumasi? Based on this, you can now look at which of them is performing well. You can choose the one that is performing. Okay, so I built foundation for the two. If you don't get any, if you need clarity, let me know. If you don't get anything, let me know. The rest will be calculations. Is everyone okay?
Sir,
Yes, sir.
yes, sir. Before we go to the calculation, if you can check that of return on investments.
If I should explain the return on investment too.
Yes.
Okay, so that one is very simple as compared to the residual income. So the return on investment is saying that, okay, any amount you have invested, how much are you getting back? So because we are investing so much, huge amounts, somebody is going to invest 500 million. So, and we'll get a profit of, let's say, if you invest 500 million and you get profit of, let's say, 120 million. Okay, so we will just simply take 500, 120 divided by 500, and you see that you are getting profit of 24%. Then, because we want to simplify things for everyone to understand, we'll say that every 1 cedi you invest, you are going to get 24 pesos. So that is return on investment. So it means if that is true, if you invest 500, then how much you multiply the 24% by 500, then you know that this is what you will get. But what we want is the percentage that you are getting. So that percentage is, let's say 24% from this scenario. So simply is the profit you are getting, okay, after subtracting all the costs, you know accounting, we do all the computation before we get the appropriate profit. So divide that profit by the investment you have made. You are doing business, right? A lot of you are doing business. So you will just take your profit you have made, okay, after subtracting all the expenses, divide it by the total assets that you have used to make that profit. Whatever you get is what you call return on investments. Is that okay?
Yes, sir.
Okay, so look at this one. Now the example 1, 2 here is for residual income. All other examples, the same question, we need to use 2 of these techniques or methods to work on it. the residual income of a division. So we want to say if, so it should be if. So if the residual income of a division of a company that has net income of 400,000, so that is your income. So that your income is 400,000, and assets. So the assets or investments.
Sir,
Assets
it's
base or
40,000.
investment.
Oh.
Sorry,
Sir,
40,000. So 40,000, and the assets base is 30,000. So your net income is 40,000. Your assets base is 30,000, and then the minimum required rates, okay, is 12%. So what will be your residual income?
your screen is not showing.
Really?
Sir, please,
Check
your screen is
from
not
your
showing.
side. Check from
Your
your side.
network.
It's from my side.
Yes. Go up and come back.
Oh, okay.
So what is the residual income? So you can't see it, right?
3,600.
So simply, this is how you do.
3,000.
You know your
Sir,
divisional income as
3,000.
40,000. Then you less your minimum required rate. So the minimum required, the assets base is 30,000. The percentage is 12%. So 12% times 30,000, you get 3,600. So if you take this 3,600 from 40,000, you should get 36,400. So this is how we do to get residual income. You can see my screen, right?
Yeah, now I can see.
Okay, so let's look at question 2. I want you to look at question 2. How many minutes should I give you? Question 2, A and B, only A and B for now. Then when we finish, you go and do the C on your own. How many minutes should I give you for question 2?
Oh, 5 minutes.
So 7:40. Please, if you don't have the question, take screenshot of it. I want to go off and come back briefly. Please, can I go off?
Yes, sir.
Okay. So by the time I come, you are done with it. Please, are you done? What do you have?
Yes, sir.
Okay, so take us
Yes,
through
sir.
what you have done.
So for the A, that was determine the division A expected return on income. So I had 22.5%. I used the formula you said earlier. That was operating profit over total asset times 100. But from the question, we had divisional investment. So I used the divisional investment as the total asset. And the divisional profit was given as 360,000. And the um, divisional investment was um, one 1.6 million. So times 100, you get 22.5%. And for the II, it says you should calculate the residual income. So we have the divisional profit to be 3,600, and I less the minimum returns, that is 20% of minimum required rate of return times the 1.6 million. So when you multiply, you get um, 320,000. So when you subtract 320,000 from the 360,000, you get 40,000 as the residual income. Hello, hello.
Yes, yes, yes. I'm hearing you. Anyone with different answers? So what did you get for your ROI?
RI, I had 22.5%.
And then okay, take us through the RI.
So the RI, I had the divisional profit is 3,600, and we are to less the minimum rate of return. And the minimum rate of return is made up of the rate of return times the target required rate. So there is 20% of 1.6 million. So that will give you 320,000. So when you less the 320,000 from the 360,000, you get 40,000 as the residual income.
Okay, thank you. Any other one with the same? Who has the same answers?
So I also had the same answer.
So I had the same answers.
Okay. Then let's move to C. C, they are going to do the adjustments. And so please, when you go do the C on your own. So for instance, the units is 10,000. So you add 10,000 to 100,000. And then the price is 9 cities. So 9 cities times 10,000. You have 90,000. Add the 90,000 to 1 million. So you just be adding it. So you'll get new divisional profit. And then you get new divisional investment. So you can now do for A and ROI and then RI. Okay, so let's see this question 2. Practical question 1. Okay, for question 1, please read it. Read the question 1. Question 2. Question 2. Someone should read the question 2 for us.
The bottle labeling
So I make
division.
it black.
The bottle labeling division of Crash Drinks Limited currently has capital employed of 100,000 Ghana cedis. and earns an annual profit after depreciation of 18,000 Ghana cedis. The divisional manager is considering an investment of 10,000 Ghana cedis in an asset which will have a 10-year life with no residual value and will earn a constant annual profit after depreciation of 1,600 Ghana cedis. The cost of capital is 15% required. Calculate the following and comment on the result. I, the return on divisional investment before and after the new investment. II, the divisional residual income before and after the new investment.
Okay. So we are going to calculate for ROI and RI. Both of them should be before and then after the investment. So it means that this bottle labeling company already have their existing investments. They have their existing assets of 100,000, we call it capital employed, and they are getting their profit of 18,000. But they are considering adding a new investment of 110,000 cedis. So they want to know whether they should add this investment or they shouldn't add. And if they add, what will be their ROI? Okay. And then if they add, what will be their RI? That's all. So first of all, let's start with ROI. What is the formula for ROI?
Return profit.
Operating
Yes.
profit
Return
over
on
total.
divisional
Divided by
investment.
total assets.
Good. So you see that it's the same thing. It's just like, let me see. It's just like it's like a colibri Joseph Akutu. Is that what is that? Akutu or what? Joseph, what's your full name? So one person with so many names.
The
So
full name is Akolbire Aimle Joseph.
Akolbiri Ayimble Joseph.
Yes, please.
So three names. If they call Ayimble, Joseph will get up. If they call Joseph, Akolbiri will get up.
Yeah.
Yes. So divisional profits, you can use divisional profits, you can use earnings, you can use returns, you can use divisional income. Then when it comes to the down one, I told you I give you about 5 of them, right? So it depends on what you anyone you put, you are right. All right. So if that is the case, what is the ROI before? ROI before the new investment. So it means that the new investment is starting from here. So that is the one in green. So the one in black, you use it to calculate the ROI. How are you going to calculate the ROI before?
So you take your capital employed and then your division, that's your profits, your annual profit. So the annual profit after tax is 18,000 Ghana cedis. And then the capital employed is 100,000 Ghana cedis. So you divide the 18,000, which is the profit, over the 100,000, and then you multiply it by 100%.
Okay. So what do you get?
18%.
18%. So that is ROI before, right? So let's calculate the ROI after. So we are adding 10,000 and we are getting additional 1,600. So what will be our new ROI?
$19,600.
Don't take us through the procedure before you give us the final answer.
So, the profit after depreciation was 18,000. Then the said that an asset which will have a 10-year life with no residual value and will earn a constant annual profit after depreciation of 1,600. So I added
Yeah,
the
so
1,600 to
please,
the 18,000.
not necessarily here alone. You can help. Don't give everything to one person. Go ahead, please. Oh, who was talking?
So I'm the one talking now.
Madam
Yes, sir.
Gifty. Please continue.
Then the capital employed initial you had 100,000, so you add it to the 10,000, which is the divisional manager is considered an investment, additional investment of 10,000. You add it, so you get 11,000. 11,000, so it will be 19,600 divided by 11,000 times 100.
So what do you get?
Then you will get 17.82%.
70 point what?
Some kind.
Please, everybody should write the two figures down.
17.82%.
82%.
70.82%. And before was how much?
18%.
So
18%.
what is happening here? And what will be your advice?
That's been a reduction. It means that the additional the new investment did not help.
Okay. So what would be your advice to them?
So I will advise them not to take the new order.
Okay. Any different or contrary advice? Yes. What would be your advice?
Say, so I'm coming.
Before was how much? 18%, right?
18%.
18%.
And after is what?
17.82%.
17 points.
So what's the difference between 80% and 70.82%?
There are
Approximately the after investment might be 18%.
No. Don't approximate. What's the difference? Sure, you think that if the investment
there
is
has been a reduction.
0.18.
okay.
0.18.
Yeah, 0.1 is. Hmm. So what would be your advice? Will you also go by what? Is it Andres or who? This,
Yes, it was Andrew.
yes, will you go by Andres? Uh, Andres is not a risk taker. He's afraid. Hey, Dupoku, she will give you the whole day.
Oh, say I said there has been a reduction in the investments when you compare the before and after. There has been a reduction in it because the before was 18% and the after was 17.82%.
We are
So there has been a reduction
no, we
in
are
the
asking for
investment.
your advice.
So me, if for me, I'll go for the before, since it's
No.
having a
The point is,
The
speak
thing
like
has
a
been done
board
already.
member. They are asking for your advice in the board meeting. They were, eh, they if they don't add a new investment, they have 80%. If they add a new investment, they will get 17.82%. What is your advice? Should they add or they
so,
should
I
not?
will say
They
they
should
shouldn't
not
add.
add.
They should not add. Yeah.
Just because of the reduction of 0.1 uh 18%, they shouldn't add. Well, fine. If you are
So,
a quantitative person, you say that. But don't you think that in the future this new investment can change? It can bring more value.
so maybe
Yes.
because it's in the short term, that's
Mhm.
why. But when they consider the long term, maybe the profit will go. Hey,
Okay.
go
You shouldn't be
Okay, sir.
afraid of your answers. So you should always justify your answers. Okay.
Okay,
ahead.
sir.
I want to write some exams recently. There is no right or wrong answer. Sometimes the question is wrong. Make your assumptions and work. Hmm.
Hmm.
Because
Yes.
in real world situation, you not find everything simple like that. Or don't haven't you encountered some things like that?
Right. They are there.
Yes. So don't be afraid of your answers. That's why I don't want to talk. No wrong, no right answer. So justify why you said they should not what they should not add a new
Take the
investment.
statement.
Also justify why you said they should add new investment. Or you can even write the truth both. You can say that they shouldn't add new investment because it's going to decrease their returns. However, in the future, this investment can also lead to a higher returns. So if they are forward looking, or they can still go ahead and do the add a new investment. After all, the reduction in their invest returns is just in an insignificant 0.18%. So someone will say, this is a matured advice. Then let's do the divisional residual income quickly, 2 minutes. Who is doing that for us? Before and after. Before and after.
So, uh, before the profit already was 18,000. Then we're giving a minimum uh, return percentage on, or the cost of capital is 15%.
Mhm.
So you calculate 15% on the capital employed, which is 100,000, and it will give you um, it will give you 1,500. No, 15,000. So when you
Okay.
subtract, You get 3,000. That's before. Someone should continue with after.
Okay, so with the after investment, our divisional profit is 19,600. And then from the question, the cost of capital is 15%. And then um, our division capital employed is 110,000. So find 15% of 110,000, and it will give us 16,500. So we deduct the 16,500 from the divisional profits, which is 19,600, and our divisional return um, RI will be 3,100. Please on that.
Okay. So what is the profits, the RI for before, and what is the RI for after? Let's look at the two.
The RI4 before is 3,000, and then the RI after is 3,100.
So which one is higher?
The after investments is higher
So what
than
will
the
be your
before.
advice? What is your advice, everybody?
Okay, so say
Mm-hmm.
my advice to the company is that if you look at the two, the initial, which is 3,000, and then the after, which is 31, that is 3,100, clearly indicates that when the company takes the investment, it is going to increase their residual income by 1,000, by 100, which is uh, good. So I will advise them. I advise that the company go ahead to take that investment, since in the short run it will help them.
Okay. So we go on. Question 3. This question, reward for anyone who is able to crack the code. Question 3. So someone should start reading.
Super Express Company Limited runs a fleet of buses on the Accra Sunyani route, which is considered as a business unit. The following is an extract from the final accounts of the company as at the last operating year. Stock of buses on that route at cost less depreciation is 660,000 Ghana cedis, and net operating profit is 198,000 Ghana cedis. One of the buses bought 3 years ago at the cost of 150,000 Ghana cedis was not performing efficiently because it got involved in an accident just a year after it was purchased. Although the damage was minor, the operations manager suggested that The bus be scrapped in spite of the fact that it earned a profit of 6,000 in the year. Depreciation is at the rate of 20% per annum on straight line. Required. Evaluate the effect of this proposal on the performance of the business unit if return on investment is used to measure the performance of sub-units. Thank you.
I'm um I'm giving you 6 minutes to do discussion among yourselves and see if you can crack the code. Is that okay? Everybody should contribute. I'm watching. So the question is, you are supposed to evaluate the proposal. Okay. The car is, they are running transport business, so their assets are cars, and they will give you the assets and then their divisional profits. But one of the assets, one of the cars is having problem. So they are considered, the car got as the still part of their cars, still also generating some profit. But they are considering removing that car. So if they remove the car, what will be their ROI? Okay. So here you are only looking at ROI, no residual income. Not RI. So you are using only one. So if they remove the car, what will be the ROI? If they don't remove, what will be the ROI? So anyway, so they're asking, should they remove the car or they shouldn't remove the car? That's all about the question. So you start discussing among yourselves.
Guys, please start. Let's follow you.
Men first. So the men please start so that we will follow.
The head of the family.
When it gets here, yeah, we want the mail.
Okay. So are we there?
Yes, sir.
Start,
Please,
Mr.
we are here.
Okay. So if we are to extract now we are supposed to find the ROI. So the ROI, we know it is operating profit, and then the assets, or in other words, the investments, or yeah, that's the total asset. So in this case, I am seeing, as Madam was reading, she mentioned that the of buses on that unit at cost less is 660. So that is the assets. Then and net operating
Hello.
profit.
You said the
Yes.
660 is the asset. How?
So that
The
is
question,
the
the
stock
question
of
is
Because Mr. McLean said they are dealing in cars. And since they are dealing in transport, their asset is
is the
is the
stock
buses
of
or the
buses.
cars. So when you read the question,
Uh,
it says stock of buses on the route at a cost less depreciation is 68,000.
uh,
So I think 68.
okay.
660,000. So that becomes our asset.
660,000 becomes the asset.
Yeah. Then and net operating profit is 198,000. So the first part, the ROI, the first part is the 198,000 over the 660,000. I think, yeah, it is multiplied by 100 to get your figures. So 198,000.
Okay, let's divide it.
Yeah.
198,000 divided by what?
Divided by 660,000.
Times 100, right?
Yes.
Okay, it will be 30%.
Okay. So 30% for the first one. That's
Is
the,
it before?
yeah, this is the before the proposal.
Okay.
Before the proposal. So since ladies first, ladies will also do the second one.
Continue now.
Mr. Andrews, so this one too, are we finding the before and after?
No, you see, there was a proposal. He said that one of
There
the
was
buses, there was a second part. One of the buses,
so one of the buses bought 3 years ago at the cost of 150,000 was not performing efficiently because it got involved in an accident just a year after it was purchased. Although the damage was minor, the operating manager suggested that the bus be scrapped in spite of the fact that it earned a profit of 6,000 in the year. Depreciation is at the rate of 20%. No, I think this one is, you have to find a RI on this one. There was no before, Anna.
So that means, do we need to find
Edupoku is gone.
Edupoku is gone. No.
No, he's here. But Edu, we didn't hear what you said.
We didn't hear what you said.
I went off and I came back. So I only heard of Andrew saying before and after. So I asked, is there before and after in this question?
I think there was a proposal. Okay. So the proposal says that one of the buses was involved in an accident and they decided to scrap that bus, even though the profit that they get from that bus every year is 6,000. So if they are going to scrap it, then it means that the profit will reduce. Anna.
And they are going to sell it.
The profits will reduce.
Is it the asset? No.
But now the asset.
If
I understand what you are saying now the asset is the bus, and they were using the bus, and in 3 years' time, the bus, some of the buses had an accident, so they wanted to sell those buses out. That means they are going to subtract those buses they are going to sell out from the initial investment. Yes, sir.
From where?
Because I didn't know a year two. So what kind of question here? A2. Also, baako scrapping. That is time my air shares here. And a baako scrapped. So more like they are a best 3 years time. It may not be related back on the first one, before and after, no, are they after, no, the new prices and before prices and honor, the prices that is over after, no. In this, say, you better as a best crab be off there. I think it was a quite free, really.
What's your game?
In the end, they say, this is the first one. My main first example now, and a year before and after. Instead, no, not add ups, and only add it, BB account into your first one, and a operating profit. Operating profit, the second one, and the BB count, the crown. So I say, and the BB after. By this one, no, see, you see, operating profit for the scrapped one now. This is what the 3 years time now we use can best say you typically first one time we talk can for near the operating profit.
Amount ben ye better fix I also two amount now we have
we are
the
taking
150,000
Yan question no.
so okay
I
I
say
say
although the
one
damage
okay
the damage was minor, the operating manager suggested that the bus be scrapped in split of the fact that it earned a profit of, so that one is a profit too, of 6,000 in a year. Then yes, so you so per profit now. This is what 6,000 if the first 6,600 anymore. And so operating
but
profit.
no Matthias, but my problem is when us even though it means there and then a young if you got profit no a 1,800 198,000. That's the profit too. Now the 660,000 is an asset.
It's an mimic asset one mimic asset the and more.
And then I got 6,000 every asset in the one I meant to ask him.
It's a
yeah,
Mr. Martin.
hello.
But I'm Matthias.
Hello.
My point is
Me
my point is
patrol.
that
Me suggestion
okay,
kakra ni say. Almost say bus no omo aton ama scrap for. Nti omo ton ama scrap for no omo nya profit of 6,000. Nti this time no after mat say ya ton
What's the
ne profit no na eka previous 6,000 na eba no ho. Nti since it has been sold out, it means that I can say car ni ni ho no biem. Nti sa 6,000 no emma biem for the year. Enu nti na ye ti e dey free can say operating profit. That is my idea.
good.
That's
So
what I
that's
say.
it. That's it. So
Na me ka say almost say car no eye ejuma a emma omo profit of 6,000 every year. Nti it may be say as at the time now almost total profit operating profit for the year ni buy no now they have not yet sold that car off, but now it has been sold off. They say now you turn off no. The profit of 6,000 it has been captured in the operating profits during the year. That's why I try to say every year no net profits are eba no. And our net profit na eba no, it includes this accident car na any problem no. It is a year na yeah turn the mass crash no. So 6,000 no emma biem. Into any no but 198,000 no. Nti wɔ sɛ yɛyi saa 6,000 398,000 sɛ na ɛbɛyɛ a yɛbɛnya the actual operating cost. Mente asɛm.
Okay. Okay. Asɛm ne mpakyɛw so the 150,000 the yɛnyɛ ne hwee
Daabi ɛno yɛnyɛ no biribiara.
ɛno no ɛwɔ
OGD.
asset that amount is in the asset dada ɛho.
It is a 150 yen anything.
Okay. Mr. McLean, please, we are done. Okay, my.
Okay, so what did you get? Before they removed the bus, what was your ROI?
Say,
30%.
It was
30%.
30%.
And after you removed the bus, what became the ROI?
That was what we, I mean, discussing as like
You say you are done.
understanding is so we are done, but we need you to help us.
No, you need to give me what you had before I can see what that is. What did you come out with? Or you got lost? Did you get tag or what? Everybody's quiet.
So the second, after the proposal, that is where the problem came.
Okay. So let's do it. It's not difficult, it's just simple. But it gets, if you don't watch it, you get confused. Before the proposal, how much was their assets?
6,000, 660,000.
Okay. And inside this asset, there is a bus which got accident and it must be removed. But before then, this is 166,000. What is it? Is it net assets or look at here? They said stock
It's
of
net
bus
assets.
is net
Less
assets, right?
depreciation.
Less
It's net
depreciation.
assets.
Good. Now, one of the buses is inside this 660,000. Okay. But that bus, no, the cost of that bus was 150. So the cost of the bus is 150. But we don't know the net assets of the bus. Do we know the net assets of that bus?
No.
No.
See, the assets we have here is the net assets. So you cannot subtract costs from the net assets. It's wrong. So what you do is, let's look for the net assets of 150,000 car. Then how long will that 150,000 car last? They told us that the
3 years.
is it
Say 3
year.
years. Oh yeah.
is that what they said? They said that it got involved in an accident just a year after it was purchased. Is that not what they said?
Yes, sir.
But
sir.
what is the life of that asset? Okay. how long would that asset last? They said on the buses, one of the buses bought 3 years ago. Have you seen? Bought this bus how many years ago?
3 years.
3 years.
3 years ago.
So this, when it got accident, is not our problem. So if it was bought 3 years ago, then how many years has it gotten depreciation?
2 years.
3 years.
3 years. Where did you get the 2 years from? So every year you have to depreciate
It's,
it.
it's 3 years.
What is the depreciation policy of the company?
20% the
20%.
per annum on straight line.
Okay, so now I think I've cleared it for you. Can I do it all?
Oh,
So get,
Hmm.
or I should still continue.
Yes, sir.
Okay, so
say carry
so,
on.
so the
Yes, Madam Gifty, one of them want to talk.
The technician.
so say
Mhm.
the cost of is it the assets for the third bus? We will have to calculate 20% of the 150,000 for 3 years,
Good. Somebody
and
should do
then
it. Do that first
okay,
before we move forward.
we should do
Everybody should
that.
do it.
I don't have calculator here. So 20%
So Gifty, tell them what to do.
150. You got 20% of 150,000. Please, we'll get how much?
30,000.
30,000. So
Yes.
30,000, 30,000, 30,000. It will be 90,000. So we'll
Yes, ma'am.
subtract this 90,000 from the 150,000, and we'll get how much? Is it 7,000 or 6,000? 60,000.
60,000.
60,000. So the
60,000.
60,000 will become the uh, is it stock?
I said
The
net
cost
worth.
of assets. So would deduct this 60,000 from the 660,000. Please, do you understand?
Yes, madam.
Yes, madam.
We'll deduct the 60,000 from the 660,000. Then we'll get the actual assets. That is after the third car was sold. So we use it to calculate the RI, the residual ROI. Yes. Say I'm done.
Good. You have killed everything. Okay. So I have a lot of assistants. Teaching assistant, yes. Okay, so we are done with question 3. And it's late. So, or is there anyone who is having issue with question 3? No issues, right?
Sir,
Yeah.
so it means that the 6,000 that they brought it to confuse us, right?
Ah,
Oh,
she didn't talk about the
we are using
6,000.
it.
You
The
use it.
6,000,
This is the profit
the
component.
6,000 would deduct from the operating profit. And I
Net
fancy
net operating
net
profit.
profit. We deduct the 6,000 from the net profit, and then we deduct the 60,000 from the assets, cost of the assets, and then we have 190 192,000 divided by 600,000. So the answer will be our ROI with the proposal. Market. Auntie, do you understand now?
So what about
Yes,
the
ma'am.
Oh, say I
the
say.
Ebefa,
Still.
ebefa, miss you, ebefa.
Well, say without the proposal, no, no, car na enya accident, na ni nyinaa ka ho. And say 198,000 divided by 660,000. But ROI with the proposal, no, yet on scraps, no 6,000, yet free
04.
net income, nim. And depreciation na ọmụ ti yẹ no deɛ ɛka yɛ no yɛ 60,000 no ɛno nso yɛte free cost of assets nim nti no yɛ wei ROI no instead of 198,000 out of 660,000 it became 192,000 out of 600,000. Net
Okay.
profit ni yàtí 6,000 and our cost of assets ni yàtí 60,000 a day fee. Then we just use the formula times 100 and we get the
Okay.
answer.
Okay. Okay. Thank you.
Okay, so we are almost done. So let's close today. So question 4 and question 5. Question 4 and question 5. I want you people to meet on your own and do discussions for question 4 and question 5. The reason is that question 5, question 4, question 3, they are like Baumia and Mahama and Cheddar in 2024 election. So please, I don't know, you can find a day. Monday I'll not be available because I'll be traveling. I'll not be available on Monday. So you can use Monday or the Sunday so that you prompt Hood. You prompt Madam so that she would allow you to do discussions among yourselves. So solve question 4 and question 5. Okay. So that is your assignment, your work. When you solve it, if you are getting confused, if you are doing it and you are getting confused, anyone, you can WhatsApp me or you call me. You can call me or anyone can WhatsApp me the issue you are facing. I'll explain to you. I won't come back to solve those 2 questions with you. So find time to do those discussions. Then when we come back Friday, are we meeting on Thursday?
Yes, sir.
Yes, sir.
So Thursday we'll do budgeting. That means we have budgeting, relevant costs, divisional performance, break-even analysis, budgeting, relevant cost, divisional performance, break-even analysis, and then the overview. So at least 4 topics. We have 4 topics, right?
Yes, sir.
Nice. Is there any issue, any concern? So if that is the case, I'm done with divisional performance. But those questions we are going to discuss, take them serious.
So the one that we are going to discuss.
Yes.
I have some more.
I know when you discuss it among yourself, you get it better than if I'm just solving. Okay. Is there any other issue or any issue?
No, sir. Thank you very much.
You're welcome.
Thank you, sir.
Thank
You're
you, sir.
welcome. All right. So have a good night.
Thank you.
Thank you, sir. Thank you. Dr.